Governor, how far sterling would have to drop before you intervene?
Well, our regime in the United Kingdom, which has served the country very well, is to have a floating exchange rate. The bank has never, and the MPC by extension, has never intervened for monetary policy purposes. I think we have to recognize that this situation, Brexit, whatever form it takes, will represent a real adjustment to the economy for a period of time. Relative incomes in the United Kingdom will be lower than they otherwise were. There will be a terms of trade shock, again determined by the nature of the final arrangements, no deal or some form of deal, and the exchange rate needs to adjust accordingly for that. And let the exchange rate do its job and us to focus on ours, which is to maintain price stability, and in doing so support the economy, support jobs and growth as best we can. So I'd underscore that we've never have done it. I would also draw attention to what happened around the referendum when expectations in the market, they were wrong, but expectations in the market put very low weight on the outcome that occurred as late as 10 o'clock at night. The evening of the referendum, probabilities at least were around 20% that the vote would go the way it did. The market adjusted very quickly once it realized the vote was going the other way. It was an orderly market. There were high volumes. There were big moves in sterling, but it moved to a level that was consistent with, at least at that point, the market's assessment of the new economic realities. It subsequently adjusted those expectations further as the potential outcome of Brexit has shifted. So we don't want to get in the way of that. And it would only be in the most extreme circumstances with respect to market functioning that we could contemplate any activity. But we haven't seen it. We didn't see it under the most severe stress.
What do you mean by the most?
Well, the most extreme circumstances would be that the market is not functioning for some reason that, to be candid, I can't contemplate, but never say never. So it would be a situation where there were very low volumes, there were large price gaps, bid-offer spreads became very wide, and there was actually a dysfunctional market. As I say, the huge test of the market with the referendum, which is quite different than the process that is unfolding right now. So it's very hard to envision, and we would not intervene, to be clear. I don't contemplate, at least I can't see a circumstance that we would intervene either for market functioning purposes. Never say never on that, but I would, at least on a personal basis, say never for monetary policy reasons.
But if you did need to, have you got the tools, the reserves, and the authority you need to take action?
Yes, we do.
You do?
Yeah.